Time now to take a look at the latest business news, and we start with how the markets have been reacting to that news that Donald Trump has signed bills in support of the protests in Hong Kong. To tell us more, our business editor Stephen Carroll is here. Stephen.
Eve, this news is coming at a crucial time in US-China relations. They're in the middle of negotiating an interim deal to end their trade war, and this escalation of diplomatic tensions isn't inspiring confidence that an agreement can be reached. Now, we had seen shares tumbling in Hong Kong and Shanghai when trading got underway this morning, not long after that news had emerged from Washington. But the losses have actually been pared as the trading day went on. The Shanghai Composite down by about 0.5%, and Hang Seng in Hong Kong down by just over 0.1%. That had been much further down earlier on in the day, perhaps suggesting investors don't think that this move will derail the talks. But the negative trend generally has carried over into the opening of European trading today. London, Paris and Frankfurt all in the red. Technology shares among the main fallers there. Well, meanwhile, negotiators from Canada, the United States and Mexico have been meeting to put the finishing touches to their new trade deal. The discussions have focused on adjustments needed to get the agreement passed through the US Congress. Democratic lawmakers have been seeking tougher enforcement of labour standards to be included in the US-Mexico-Canada agreement, which will replace NAFTA. Speaking after their meeting, Canada's Chrystia Freeland says the gathering had gone well.
I will say that Canada absolutely believes that getting this agreement ratified in all three countries would be a positive step for Canada, for the United States. For Mexico, it would be positive for our entire continent and for the prosperity of the people of Canada, the United States and Mexico. And we are here to do the work needed to get there.
South Africa's state-owned airline is close to collapse, the government there has warned. Minister Pravin Gordhan said the carrier had suffered a sudden deterioration in its finances after a recent strike by workers. Sources telling the Financial Times that South African Airways may have to file for bankruptcy in the next few days if it can't come up with the equivalent of some €120 million. SAA needs a government guarantee to borrow money from the banks, but the Finance Ministry is reluctant to approve further bailouts for state-owned firms. The French government has suggested it could make adjustments to its controversial overhaul of the pension system. This as unions prepare for a massive rolling strike against the reforms due to begin next Thursday. The demonstrations are expected to cause major disruption to transport. Simon Harding has the details.
The French Prime Minister won't budge. The new pension reforms will be pushed through, but Édouard Philippe said he was open to negotiating on the time frame.
A universal pension scheme, yes. In a brutal way, no. I don't believe that an immediate change would be acceptable or legitimate. However, I don't believe that a slow transition, which could take dozens of years, is the solution either.
One of the focal points of Emmanuel Macron's manifesto has been to consolidate France's dozens of pension systems into one. The changes would see people working longer to get a full pension. Initially, anyone born from 1963 onwards would have been affected by the change due to come into effect in 2025, but that could now be pushed back for people born from 1973. Put forward this summer, the reform saw huge resistance from unions and in particular transport workers who already staged a strike in early September. With another massive general strike looming on December 5th, union leaders have urged workers to take the government's assurances with a grain of salt.
What the government is trying to tell people is don't go on strike because this strike won't concern you. But it's a con act because at some point it will concern everyone.
Meetings with representatives from the different unions and industries are due to continue in the coming days. The government has said they wish to start official negotiations by December 10th.
Finally from me, the video sharing platform TikTok has restored the account of a user who was suspended after criticising China's treatment of Uyghur Muslims. Feroza Aziz's accounts were suspended after she posted this video, mocking, or rather in the style of a makeup tutorial, in which she discussed the mass internment of the Muslim minority in China. Now, TikTok has apologised, saying the suspension was down to a human moderation error. But Aziz on Twitter said she didn't accept the company's explanation that her account was taken away because of an unrelated satirical video. The platform's owners, ByteDance, based in Beijing, have been insisting that they don't apply Chinese standards on moderation outside of the country. But this is a high-profile dispute of the fast-growing platform, which has been downloaded more than 1.5 billion times, according to industry research. It's faced a lot of criticism as well, particularly in the US, so interesting to see how they'll handle this.
Absolutely. Stephen Carroll, thanks a lot for that business update.